Hey, good day, everybody, and welcome back to this edition of Check the Map. I'm Tyler Bannister, joined by Kirsten Crum and Nick Wages of SRG Financial Advisors. We are a week past Labor Day. Hope you guys had a good holiday last week, staring into the last few months of the year. We have a lot of economic data came out the last 2 weeks since our last recording, and we're going to dive into quite a bit of it, specifically around the labor market, jobs, personal consumer expenditures, spending, et cetera. Uh, a lot of what you could say are positive signs, and then contrast that with maybe some expectations at the household level. So we'll talk about that. The market is kind of showing a little bit of that tale of two sentiments as well. Just in the last couple of weeks, there's I'd say over half of the trading days, they've had headlines saying a new record of this index or a new record of that index. And obviously, the outlets that report on financial news are going to pick whichever index hits a new record that day. But when you look at the last couple weeks in its entirety, it's kind of interesting because we're seeing S&P new record, NASDAQ new record, whichever index it is. Yet in the last 2 weeks, we've seen these headlines. The S&P is only up 0.23% in that entire time frame. The Nasdaq 100 up 0.66%. Russell 1000 up 0.34. So you think, we're seeing all these headlines saying, "Hey, the market's going up, new record, new record." Um, but it's so nominal when you look at the that 2 week period. There's not a huge increase in that same time frame. U.S. bonds have actually outperformed the last 2 weeks, outperformed stock indices. The aggregate bond index has been up about 1%. The Dow is actually down 0.5%. And then what's usually the risk off safety safe haven with gold, just in the last 2 weeks was up 6.59%. Um, so again, we're seeing it's a kind of a dichotomy. It's positive headlines about the market, and yes, there has been an increase, right? It technically is a new record on many of these closing days, but it's really muted overall, and people are really still flocking to gold at this point. So a lot of that realistically has to do with uncertainty. Uh, we talked about our last recording, the Russell 2000 had leapt up in a huge way during August at Powell's one little phrase hinting at him being open to a potential rate cut here in the month of September. And we saw a flurry of activity. Small caps really rode that wave, and they've been fairly muted since then as well. But between, again, the uncertainty on tariff policies, and now we have a court ruling saying that we're supposed to pay back like half of our tariff revenue, which is a super interesting um, division of government question. As far as is that possible for them to say pay back tariffs from a judicial court? So anyway, lots of uncertainty, lots of things moving, and it's kind of hard to keep track of all on top of all this uh, what would you say, just the life headlines that come out. So in that line, in that same vein, talking about regular life, the labor market, right? We'll talk about expenditures and cost of living and spending and things like that. But to do that, we have to have jobs. We have to be able to earn a living. Um, and you think about expectations and the people's optimism towards the job market. We had a new report come out from the New York Fed, Federal Reserve Bank of New York. This is consumer expectations, and this is specifically job finding expectations. So if someone lost their job today, their what percentage chance they think of they have of finding a new job within the next 3 months. And so this data set isn't that old, right? It goes back to June of 2013. Since they started tracking this survey, though, we actually just hit the lowest reading it's ever had for August of 2025. What this is saying is 44.9% of people surveyed believed that they actually could find a job within the next 3 months if they were to lose their current job. If we go back to when this first started taking this reading, their first reading was 49.6. And you can see over time it got to this high point in June of 2019. So 6 years ago, it was up to 63.7%. Essentially, two-thirds of America said, if I lose my job today, I'll be good. Next 3 months, I'll find something else. And then the pandemic hit, and we dropped down here to 46.9. In December of 2020, down to 46.2. Here in August of 2025, we're actually lower than the winter of the pandemic year. Um, so eh, you can see a little bit of a lack of optimism. Last week, 2 weeks ago, we talked about survey of consumers, this consumer sentiment, the index of consumer sentiment that the University of Michigan tracks. And we saw from July to August of 5.7% drop in consumer sentiment. So we were 5.7% lower, meaning more pessimistic. From August of 2024 to August of this year, we've dropped 14.3%. So we're seeing, again, at a household level, whether it's employment or just a consumer's ability to go out and purchase the goods and services that they need to function, there's a little bit of hesitation that's brewing out there. But on the flip side, Nick, I think you have some of the job data that just came out in the last 2 weeks.
Yeah.
There's
One
also a
thing
lot
that,
of positive things.
yeah, well, and one thing that's really interesting about the confidence of finding a job is that trough during COVID. Think about that was correlated with industries being completely shut down for a period of time, like lockdowns, hospitality industry was like wiped out. So the fact that now we are in a situation where people's expectations of finding a job in the next 3 months are lower than when we actually had sectors of our economy, substantially slowed or closed for a period of time,
Yeah.
is really interesting. What's
Well,
also
and real
interesting.
quick to your point, sorry, to your point, just to recall the situation we were actually in 2020, right? In March of 2020, we saw over 30% drop in markets. We saw bellwether companies, who people would say they'll never stop paying their dividend. I'll always have my dividend income from these blue chip stocks. We saw these blue chip companies pause and stop paying dividends, right? We saw a ton of hesitancy, and there was so much uncertainty and pessimism. People weren't going to work, couldn't go to work. The number of small businesses that were shuttered in that 12 months from March of 2020 to the next year, just absolutely insane. So that's a good observation to your point. To be lower than that now is kind of interesting.
Yeah. And really, I've got a few charts to show here. We kind of clawed our way out of that COVID lockdown as far as like the labor force participation rate is concerned. So the St. Louis Fed publishes that data. So you can see here that huge drop in participation rate during COVID. And we kind of clawed our way out of that hole, didn't quite make it back to where we were pre-pandemic. And then you can see even in recent months have kind of tapered off. What's not extremely helpful to the finding a job sentiment in the next 3 months is that the employment force actually rose 436,000 last month. So we're actually maybe in a situation where we could see an influx of maybe they're college graduates, people entering into the labor market, and the number of job openings relative to the number of people that are looking for a job right now. That's not a great ratio. Is probably supportive of the index that we just saw being at its low. Granted, it's been 12 years, but being at its lowest point in 12 years, you can see and having conversations with people who are looking for jobs right now, like the saying, the struggle is real. Like we've heard from real life situations where people have struggled finding a job, at least something that can gainfully employ themselves and support their families with. So the jobs market as a whole, like if you look at the headline data, obviously it's really grim. Um, August non-farm payrolls up 22,000. What's interesting is, for one, in the last 7 months, government payrolls are down 97,000. So there's obviously, by the current administration, been a push for maybe some downsizing of the size of the government, shrinking of the size of the government, maybe some deregulation. And you couple that with, these are really interesting reports. So I'm sure everybody is apprised of the immigration situation right now and the way they're trying to combat that. If you look at the level of foreign born people in the US that were employed back in March when it was at its peak compared to now, it's down about 1.5 million, the employment level. So 1.5 million foreign born workers no longer having a job just in less than a 6 month time frame. And then the native born job market over that same time frame is up about 1.3 million. So not sure if that's a complete picture as far as the jobs that were basically lost by the foreign born population were then replaced with native born employment. But all of this to say, it's not incredibly shocking that we see the jobs reports that we are, knowing what the push by the current administration is, both from the on the labor front and on the immigration front, and the shrinking of the government and everything that they're trying to accomplish ultimately right now. So it is interesting to follow, because just like with the tariff situation, how we kind of eliminated an 80-year trade agreement overnight, or at least they tried to eliminate an 80-year trade agreement overnight, you kind of wonder if the volatility surrounding that, the number from these jobs report, how much of it is reflective of like new normals and new trends that we're going to see, even with the labor force participation rate potentially going up, and how much of it are just kind of these one-offs as we filter through like these massive policy changes that we're seeing, because there are so many things in play right now and so many things that are really massively different than what we've experienced as a country
Yeah.
in the last few
And
years.
will large employers change their hiring practices, especially after the raid on ICE raid on the car plant last week, right? Where it's
Mm-hmm.
a Korean company, which is one of our larger allies and tech trading partners, et cetera. And then
Yeah.
um, so will companies hire differently? Will the workforce change permanently because of some of these policy implementations? Just like from a food supply standpoint, now a lot of these food manufacturers are saying, "Oh yeah, now we'll go ahead and get rid of these dyes out of our food. We'll make it like we do for Canada or Europe," and they're
Mm-hmm.
making some more permanent changes. At least they're saying they're going to in the next year or so. So yeah, there might be some new trends and some new normals and some leveling out, and we might just see some numbers we're not accustomed to. Because it's one thing to say like here's the number of people employed total, and
Yeah.
then it ends up being there's hardly any change, and then you break it out and you see hey there's actually a movement underneath the surface there from a demographic perspective. So
Yeah. And they've, like, a lot of companies changed their hiring practices immediately when the new administration came in, because of like really the loss of support for H-1B visa programs. So that in and of itself eliminated and even reduced the future hiring of foreign born individuals as well. That was a huge part of our employment sector, were people that were here on H-1B visa sponsorship by the employers they were working with. So yeah, I mean, we're 8 months into a massively different policy environment than what we've seen recently. So the fact that we're still seeing a lot of optimism, and I know, Kirsten, you'll talk about spending and PCE and all that stuff. In fact, maybe that's a good time to get into it right now. But there seems to be plenty of optimism at the consumer level, despite everything that we're seeing change right now.
Yeah. One other thing about the labor market too is, since that COVID era,
Yeah.
so many people went to online and remote jobs. And I've been hearing a lot more people recently where it's oh, great, now you're comfortable with your remote job. you actually have to come into the office now.
Yeah.
And so, and I don't have a graph for that, but I'm kind of curious how much of that goes into maybe some of that consumer report as far as how confident they are to find a job, especially if they were remote, more the probability of finding a job that is still remote
Mhm.
Hmm.
being, years out of COVID.
Yeah, because we're
That's
Americans and a lot of our data is based on what we want, like a job
Right.
and the job environment that we want,
Right. Yeah.
necessarily just what we need. So
Yeah.
yeah,
a
there's
great observation. Even like local at a local level. I mean, we're seeing that throughout Missouri, right? It's you have to come back. Like we're not allowing this anymore. You have a decision to make: either come back by this date or move on somewhere else. So it is that's
How many
an
are
interesting.
now choosing to not be employed because that was the ultimatum of you have to come into the office and someone
Right,
doesn't
because
want to. So yeah, I'm curious what I just thought of that, what a chart like that would, how to even
yeah,
reflect that.
yeah. But what's the phrase? How many days does it take to make a habit? What's the
So like 28
30.
or is that not enough?
30? Is it 30 days to make a habit, right?
Something around that.
And but now we have 5 years of making habits of working remote and that
Yeah.
type of approach. So
Yeah.
patterns of life and habits and schedules and logistics have all shifted. And now it's like, hey, now we're going back to 2019. And just like we talked about, if the One Big Beautiful Bill Act hadn't made the 2017 cuts permanent and people had to revert back next year, everybody's forgotten the tax breaks they got 8 years ago,
Yep.
and they would have really struggled to digest that. And it's the same thing with maybe even more so because tax withholding comes out of most people's paycheck without even thinking about it. So to have their life completely upended and adjusted after 5 years of new habits would be it's probably more cumbersome than a tax change even.
Yeah.
Yeah. Yeah. So all that being said, everyone's still spending money, right?
Mm, they're
Personal
good.
income, personal spending. So Um, we'll touch first on like the PCE report that came out. So obviously we track the CPI, which is the Consumer Price Index. But this past week, personal consumption expenditures index came out, which tracks just all goods and services consumed, regardless of how they're paid for. And I'll go ahead and share my screen, maybe here in a minute for my background.
Speaking of
So
how
here
things
we
are
are.
paid for, I think I saw that Klarna is gonna have an IPO here pretty soon.
Really? Oh goodness, I
I believe that's what I read. Don't hold me to it, but I'm pretty sure I saw that, which means that buy now, pay later is they're hoping it's here to stay, and
Oh goodness.
they're expecting growth in that realm. So it would in my mind that's almost like saying, hey, we're gonna take all of your local payday lenders and now we're gonna make them
Group
a
them together.
public initial public offering. Yeah, and we're hoping that it grows. We're hoping that more payday loans are issued. That's what it feels like.
The worst thing about those is just like the people taking out on like a $20 item and 6 months from now they're still paying on it. It's just like I'm someone, the last thing I want to do is take on debt. Obviously, I'm not their target audience, but it's just crazy to think about.
Yeah.
Um,
Satisfying
anyways, yeah,
gratification. I need it now. Gotta have it now.
right.
The consequences
Yeah.
are give it to me now.
Telling you, there's people out there. Anyways, regrouping. So back to the PCE that came out. This came out. This is what we target around 2%. It came out for July at 2.6% year over year. That's about 0.2% since the month prior. And then the core PCE, which is everything excluding food and energy, came up at 2.9% year over year, which is about 0.3% up from the month prior. So nothing dramatic happening here. However, it is still over that 2% mark. So according to Powell, if we can maybe, hopefully, maybe have a rate cut by the end of the month, maybe we'll hold him to those words. And then as far as changes in monthly consumer spending and personal income, I know we kind of touched on that, but personal income up about 0.4% in July. Disposable income was up 0.4%, and consumer spending was up 0.5%, which is this number here. And here's a little chart kind of breaking down what it is that consumers are spending the most on. Good portion of it in motor vehicles and parts. A lot of services as well this time around, as far as financial and insurance and housing and utilities, which are all of the kind of needs, obviously, and food and beverages, which I know we'll get our CPI report later this week as well. That'll kind of break down some of those numbers in a different way in CPI reports. So, but we're still spending money regardless of what the labor market is saying right now,
What?
regardless of what the odds of trying to get a job is. So it has been an interesting couple weeks of data, especially just kind of the wish-wash between of what we get on one end of the spectrum versus what we see actually happening out there.
One sign of optimism in that PCE index is that the 3 and 6 month annualized rates haven't really changed since the
Right.
tariff implementation, even though they're not actually implemented or even permanent at this point. But it is encouraging to see that inflation from the consumer expenditure side has not been massively affected the way that some would suggest might happen. So yeah, there, I mean, obviously there's an extremely good case for, if you look at the jobs reports and you look at inflation, really, I mean, that chart right there is about as leveled off as you can
Right.
illustrate. So there's a pretty good case, and I think there's some pretty big expectations that they cut rates and later next week, I guess. What's interesting is the doom and gloom headlines. Oh, the unemployment rate ticked up to 4.3%. The August payroll is only up 22,000. Previous months were revised downward. Personal income and spending. I mean, income is up 5% in the past year. So year over year, up 5%, and spending's up 4.7. And we talked about this on previous months. That income growth that we had seen earlier this year was very largely attributed to the Social Security Fairness Act, between retro pay for when that went through and became effective, and then also ramping up benefits for people as they, lost the windfall elimination provision or the government pension offset that increased their benefits. This was the first month in several where the growth in personal income actually came from private sector wages and salaries. So you see private sector employment gaining. I think it was up 38,000 last month compared to the super bleak, overall report. Government payrolls down. You actually see potentially, as far as long-term sustainability goes, we're maybe creating jobs in the right areas for the right reasons that are productive to the overall growth of the economy, and then the income level for people in those jobs has actually improved and is improving even still, as illustrated by last month. So
Yeah, hopefully we see continued positive trends in that regard, and if we can get some sort of movement on housing in a way that benefits, that doesn't hurt a bunch of people, but also benefits. Yeah, like that's probably one of the most consistent conversations that I've had the last month with clients who are already in that work optional stage of life and retired. It's them being concerned for and wanting to assist their kids, and as far as their kids' housing situation, whether it's renting or trying to buy their first home. And these aren't kids who are, irresponsible and doing foolish things and trying to take advantage of stuff. It's just the general situation. So it's clients who have been successful in their own life, who have taught their kids basics about money, who are being fairly responsible, and it's still a difficult situation. So, but a lot of positive movement if it can shift to where people have that feeling that, I actually can buy a house. I can actually afford housing. This is doable. I think we might be in a good spot if we can make that happen. But
Even walking it back earlier in the supply chain, feeling confident I can get a job. that's
yeah,
that's gainful
yeah,
employment and provide for myself and my family and save money and buy a house and keep up with the cost of everything that actually affects our daily lives. That's those two things obviously go hand in hand.
I will say, like, and I'll speak for you too, Nick. I know some of the conversations that you and I have both had with younger college age people who are hoping to, have a successful career. The part that's encouraging is a lot of these younger folks, like, they have such a level head on their shoulders, and their desire is to be gainfully employed, work hard, build a career, and be able to support a family. These are early 20s college students, and that's where their mindset is. That's what they're not going, hey, where am I going to go get drunk and party at this weekend, or let me go tailgate here and there. They're saying, no, what do I need to do now to build a successful life? And they truly want that, and they're working towards it. So to me, that's super encouraging. Not that it's going to be easy for people that age at this point, but I think as a whole, if we're working towards that, people are going to have they're going to create job opportunities. They're going to find opportunities that are out there and be successful. So,
Yeah.
uh,
Even on that
it's,
same
it's
note, just piggybacking on that, the conversations I've had with that demographic, college students or fresh out of college, the ones that do have level heads on their shoulders, I've noticed a very consistent trend of an entrepreneurial spirit in these kids too. Like they're willing to maybe try to make money or create a career for themselves in ways that aren't the ordinary path that we've seen over the last 3 or 4 decades, which that actually boasts pretty well for the long-term success of America. The more entrepreneurship, the more businesses that we can start up and create, the more sustainable growth we can create, not dependent upon the government sending out paychecks or creating jobs for us. That's really good. That's establishing really kind of a new foundation for generations ahead. So I think there's a lot of reasons to be optimistic.
yeah, for sure.
Yeah. Yeah. Those are all people my age, and I think a lot more people being able to see online. I feel like kind of the financial literacy is brought up so much as far as the lack of it, and it's kind of made people be in that entrepreneurial kind of mindset of, okay, I need to figure this out for myself. Otherwise, yeah, I'm not going to be able to own a home if I don't start trying now or I don't start getting my head in the game. So, yeah.
Yeah, I think you're right there. I think that ecosystem of access to information, because not every family, even if they have the knowledge, not every family chooses to have these kind of conversations about career paths and starting businesses and finances. So to have access to that is good. And even the advent of podcasts and a
Mhm.
lot of popular
YouTube and everything.
podcasts. Yeah, but a lot of popular podcasts right now for younger people are actually very business focused, entrepreneurial focused. You look at like Patrick Bet David, and he has a huge following, a lot of younger demographics, and his whole thing is he says, "Hey, the future looks bright," and it's all about entrepreneurship and building businesses. And so, whereas when I was maybe 18, 19, 20, everybody, even in the business school at the University of Missouri, the thought is, hey, what large corporation can I go try to interview with and get a good job at? Like, that's your one path. Who's coming to the hiring fair? It's all these large corporations. We're all fighting for these spots, and I want to go, work 90 hours, 100 hours a week in a cubicle somewhere. And that was what everybody was looking at. That was the only opportunities. I don't remember having conversations about entrepreneurship, honestly, outside of real estate classes in my entire 4 year education at the University of Missouri in the business school.
Mhm.
Not once.
Yeah.
It wasn't encouraged, right? And now it's like, hey, this is actually a viable path. It might be the only path to be successful in life. So, but yeah, it's exciting to see. And thanks for reminding us that we're the old guys here as well.
No, never, never.
Appreciate it. Uh,
Uh,
so what's on the calendar for the
yeah,
for the next few
let's take a
weeks?
look.
There's no way there's inflation reports on there.
Mhm.
Oh, never. Why would there be that? All right, today is, what was this? Oh, yeah, this is September.
That's
I'm like not
2024.
seeing. Oh, okay. Why is this not
was
looking
like,
right?
it's
I was like
wrong.
Hold on,
September.
let's find. I'm like, this isn't right. All right, sorry. Here. Here we go. Let's try 2025. How about that? Cool. All right. That makes more sense.
Perfect.
Today's the 8th. That lines up better. Today we had consumer credit report coming out this morning. Looking later on in the week, like Tyler mentioned, we got some more inflation data coming our way. So Wednesday we'll have PPI coming out. That's the Producers Price Index. 11th we'll have CPI come out. I'm sure we'll get some comments from the Fed, maybe not. Guess we'll have to see what those numbers are looking like as far as especially looking into the end of
If
the
there aren't
month.
explicit comments, then the journalists will try to find any like
They'll find one.
phrase. 3 word phrase is the minimum, I think, that can hint at
Regardless of
something.
what happens, there's sure to be something that makes a record. Um, some more consumer sentiment coming out this Friday. See how we're feeling. Next Tuesday we will have that FOMC meeting. That's going to probably be the biggest thing that happens between now and our next meeting. Seeing what we end up doing with rates as far as that. Some more housing data as we continue to have the discussion of housing affordability, especially when it comes to those introductory single family homes for, that younger generation starting to try to get into the job market, as well as our FOMC meeting and statement. Those will be the two biggest days, I'd say, before our next time that we all talk for the
Yeah.
next few weeks.
Yep, it'll be a lot of fun numbers for a nerd like myself. It's enjoyable to read through it, but
Speaking
Dig
of
past the headlines.
speaking of nerdy numbers, looking at the flows in and out of cash versus other, like we've talked about the Russell 2000 small cap stocks,
Mhm.
seeing the way that money is flowing out of cash and into some of those, there is certainly an optimism and an expectation, I would say, at this point that interest rates are getting cut and it's going to affect those smaller businesses and their access to capital.
Yep. Yeah.
yeah. So hopefully Jerome Powell doesn't. No, he's going to say what he wants to say, but the market is saying, "Don't let us down,
Yeah,
Mr.
exactly.
Powell." That's the sentiment right now, I think. So
Willing it into existence.
It doesn't have to be a definitive statement, though. I mean,
Yeah, no,
whatever he
right.
says can be pieced together in an article.
yeah.
Until
17.
the point where the rate decision comes out, right? Until that point, that's going to be
He blinked
the
three
end all.
times before he cut rates, so therefore,
Yeah.
Yep,
Rubber will meet the road soon.
it will. And with that, I just want to say we really appreciate everyone's time joining us on this edition of Check the Map. If you have questions, comments, topics you want us to cover, please reach out through our website, srgfinancialadvisors.com, or over the phone, 573-302-7212. Hope you have a great rest of the week, and we'll talk to you soon. Thank you.